day I've been getting spanked in ping pong, but these three currencies have been getting spanked all year. Today we're gonna be talking about the top 3 worst performing currencies in 2018, all right? Roll the intro. All right, traders, like I said before, we're gonna be taking a look at the 3 worst performing currencies of 2018, all right? This is the Australian dollar, the pound, and the euro, okay? And all of them obviously have been declining for different reasons, and we're gonna be talking about them here today, okay? So guys, look, if you're new to the channel, welcome. All right, make sure you guys stay subscribed, and if you enjoy the content, like the video for Kyler. He really appreciates it, all right? So starting off with the Euro USD, we're gonna be looking at these pairs, by the way, guys, in relation to the dollar, so we have a unilateral understanding as to how well they perform. Now, remember, the dollar did do quite well this year, but what you guys will notice is not too much consolidation with the dollar, because as the dollar was doing well, these currencies were doing even worse. These currencies were not doing well at all, okay? So you won't see any kind of consolidation, because if you did, that would have meant that the dollar was getting strong and these pairs were getting strong at the same time, okay? So we'll start over here with this Euro USD. We'll pull over Euro. As you guys can notice, again, let me pull out to the weekly. What you guys will see is nothing but a massive sell-off. Okay, so starting in the Euro 2018, we're at $1.25. All right, and so the main point of this video is to help you guys rationalize what it was that made these currencies perform so bad quarter after quarter after quarter. Okay, beginning 2018, I'll throw out some articles, some screenshots. You guys can see this was right around the time Draghi was talking about how right here at the $1.25, he had no interest in the euro being at those levels. Okay, as you guys can notice, throughout 2017 all the way to the end of 2017, there was a massive increase in terms of the valuation of that euro, because there was all these different claims that the euro was going to stop their quantitative easing process, and they haven't stopped it yet. This is actually supposed to be the last month that they're going to be doing QE. Okay, so once all that was priced in, okay, once all that positive data was priced in, basically anticipating the euro getting stronger because they're going to stop printing money, all that was priced in 2017. So that left us at this high in 2018 at $1.25. Okay, and so if the euro is going to have sustainable economic growth, their currency can't appreciate so dramatically, because that's going to hurt the purchasing power, right? So as long as the euro has a weaker currency, that's going to make it so that the citizens inside of the economy are going to be able to have more purchasing power, and they're going to be able to do more buying when it comes to imports and exports and things in that capacity. Okay, so Draghi didn't want the currency getting stronger. Once that started coming out, obviously you can see as well, right around that time in April and May, you guys can see that the market did start selling off dramatically. All right, and we did consolidate for a little bit throughout August, and we did consolidate a little bit right around July, but then we stopped that consolidation in August, and since then we've broken all the way down to the $1.12, okay, the 50% level from where this market started in the beginning of 2017. Okay, so what are the reasons? All right, well, we haven't seen a lot of inflation coming into the European economy. We're still under a 1% inflation, okay? There was still a lot of risk in the market right now in regards to Brexit. We'll be talking about Brexit again when we talk about the pound, but Brexit is also weighing down the euro a little bit, all right? And so even outside of that, we haven't raised rates. We're still at these negative rates, and right now, anytime we're at negative rates, trust me, you're not gonna see any type of increase in the currency in terms of its valuation, all right? So at least a sustainable one, right? So again, this euro, it's had some issues, mostly dealing with economics, not too much dealing with things like political turmoil or trade or anything like that. We'll be talking about that when it comes to the Aussie. The euro is just not seeing what they want to see in regards to inflation and more monetary velocity, more spending happening in the economy. Okay, so again, this is a good information, because this is going to set you up for 2019. Because if you guys start seeing certain things coming out in 2019 detailing, hey, GDP is over 1%. All right, hey, we're about to start raising rates. Okay, hey, Brexit's getting resolved. You will start to see this euro appreciate in value quarter after quarter, potentially week after week. And when those articles come out, remember, this is a macro market dominated by micro events. You may be able to catch some serious up moves from a weekly or intraday perspective, okay? As long as you have that mindset of, hey, the sentiment of this market is going to drive this currency to the upside, all right? So that's the euro. Let's pull over. Let's take a look at this Australian dollar real quick. So take a look here. Australian dollar, you guys will see probably one of the worst performing currencies inside of 2018. Now, we were just talking about this currency on Monday during the Monday market breakdown, saying that, hey, there might be a potential up move. Right now, we are still inside of last week's range. Markets did sell off a bit. dealing with more fundamental data that's come out, mostly dealing with things like GDP. They did not hit GDP targets and they didn't raise rates today. And so that is giving us some intraday sell side momentum at the moment. But again, that's the micro stuff. I think from a macro perspective, this currency is still quite undervalued, especially if, all right, the trade war gets resolved. And that's what has sold this market off to the extent to where we're down literally 10% from the beginning of the year. Okay, so earlier this year, in January, you could buy this euro for 81 cents. All right, 81 cents for $1 81 US cents will get you $1 Australian dollar. All right. By the time we were hitting off in October, folks, it was 70 cents. So literally 10-cent decline. That's over a 10% decline. It's almost a 15% sell off in the currency, right? And so right now we are up, and we did end up getting back to 73s. But if you guys look at it, I mean, we're far away from where we were in the beginning, even in 2017, and we're really at the lows in 2016 as well. All right. So again, this is dealing with trade war. All right. Yesterday, again, we spoke about how the trade war has given a massive decline in the Australian dollar and the New Zealand dollar, because those currencies are so well correlated with China and trade and things in that regard. All right. And also now we're seeing more things coming out with Australia in regards to GDP. All right. So there are some economic concerns happening in Australia right now that has given the currency such a massive decline. So again, if you start to see anything in regards to the Australian economy getting stronger, that is going to be what turns us around. But remember, those are going to be the ancillary pressing issues. The main issue happening right now is definitely trade. And that's what's driving our market so dramatically outside of this one GDP play that's happened today. Okay, so where we are, let's take a quick look from a Fibonacci perspective. If we pull up from the high to the low, right now, we're right around that 23.6% retracement. And this is me and Kyler's bread and butter because we love when markets are right around that 23.6. We know that that breeds a lot of opportunity. Okay, if you want to hear more about how we utilize the 23.6 and how we utilize fibs, click the link in the bio, head over into the top trader community. Okay, but anyway, that means this market is very momentous. Can it maintain that level? All right. We don't think so. I think, again, the trade war stuff is about to calm a bit, and that is going to give a little bit more purchasing power, a little bit more buy side activity to this Australian dollar, especially if eventually they start following us when it comes to these rate hikes. Usually Australia follows the US when it comes to rate hikes, but we haven't seen that. So if we do start to see that in Q1 2019, we will at least see this market back up at $1.75. All right. So again, that's macro. We will obviously be throwing out certain things from an intraday, intra-week perspective. I'm just giving you guys the big view of where we're at in 2018. All right, let's head over to the pound. So as you guys know, the pound is an interesting one, right? I mean, here's a quick look at the pound from 2016. Okay, take a look. Look at where we are in relation to the pound when it comes to Brexit. Okay, here's Brexit, July 2016. You see the massive sell side that came in. And then 2017, you had a pretty decent size up move. All right, and that up move was mostly the US dollar selling off. 2017 was one of the worst years for the dollar. So you are seeing a lot of that dollar weakness here correlated on that pound. It's very important to isolate what currency is getting stronger and where your move is coming from. Okay, and so that's what we're seeing in 2017. And as you guys can see, once that dollar is getting a little bit stronger, and when we saw that pound weakness, look at where we are in 2018. Okay, so in the beginning of 2018, we were right at $1.41. By the end, we're at $1.27. Okay, that's close to 2,000 pips of downside. All right, and so that happened fairly quickly. All right, from, let's see, it was around April all the way till August. We moved that entire move happened. All right, we've been consolidating since then, and we're obviously back here at these lows, but most of this deals with the risk happening inside of Brexit right now. Okay, if Brexit gets resolved, folks, you will see this market back in the $40s, and it will happen very, very quickly. All right, because they're going to just see so many market participants that have been anticipating the pound collapsing, and they have no rational idea as to where Brexit is going to lead the economy. Again, that is all priced in right now. All right. And so if anything gets resolved in that fashion, you will see this market maintain $1.27, right? Let's say it happens this week. Market should maintain $1.27, and then you should see a break back up, and we will 100% start ranging around inside of $43, $27. All right. And outside of that, it's just about, can we break higher than that? Again, Brexit is priced in right around $43. So anything outside of $43 means that the pound got stronger or the dollar got weaker outside of things dealing with Brexit. Okay. So this bad boy, one of the worst performing currencies of 2018, obviously coming in 2018, we're down 1,000 1,500, 1,700 pips in relation to the dollar. There's not many other currencies that have performed that badly. All right. So again, we have so much opportunity. Anytime you see such a massive decline in an asset, that means we're at an extreme. Okay. And that's where you want to play. You would never want to be in a scenario where you're playing in that middle. Okay. Because that literally means that there's no opportunity. You want to be in a scenario where you have one idea, like, hey, we're selling this market. There's no ifs, ands, or buts. Okay, so that's what we're looking like for the pound. That's what we're looking like for the Aussie. And that's what we're looking like for the euro coming out of 2018. These are definitely one of the top 3 pairs on the radar. Anything that we see overvalued, right? So our top 3 worst performing currencies, we're going to be coming out next week with the top 3 best performing currencies. Those are the ones that we want to keep an eye on. All right. And we want to know which ones are the top worst and the top best out of those 3, because again, that's where we're probably going to see the most opportunity, because again, those are at the extremes of the extremes. Okay, so this is something that you guys can keep an eye on and stay focused. If you guys want a little bit more detail, all right, as to what this is in regards to how to assess markets from a fundamental perspective and get some more intricacies, again, click the link in the bio. We'll be right there for you. Okay, so tomorrow we're gonna be talking about emotions in trading. It's gonna be an awesome content segment. Okay, this was definitely for you guys. We're at 21,000 subs. I really want to get to 25,000 before the year's out. We'll see what happens. But if you guys have any questions, down below, comment. We'll be right there to answer away. Okay, I'll talk to you guys tomorrow.